Okay, hello everybody. Welcome to Korean Atlanta Mentorship. And in this video, I'm going to talk about a scenario that I think is relatively easy to resolve, which is $60,000 of credit card debt with a pretty good income, 130,000. Now, the reason I'm making this scenario is because I recently met a person on Zoom who makes great money, like this kind of money, and is in about maybe $60,000 of credit card debt and doesn't feel financially secure. And it's really crazy how this channel is the main reason why I've met so many six-figure people who don't feel financially secure. I've even met someone who made, I think, 10 grand a month um, after tax and just doesn't feel it. Like I'm struggling. That's what that person actually told me. And this really reminded me of when I first took a tax and legal training for the real estate investing education company Renatus for the first time. And instructor Mark Kohler talked about how one of his clients was a plastic surgeon who made over $500,000 a year and had to pack his own lunch because he was broke, right? And I remember when I first heard that story, I think it was like 2017. I thought that was insane. And I was like, how can you be broke if you're making over $500,000 a year? Because I'm only making 20,000. We'll switch spots, right? But there's several reasons for that. A lot of it is not knowing how to manage your cash flow or debt, right? A lot of it is just making sure you don't excessively overspend. But again, if you know certain techniques like velocity banking, this shouldn't be a problem. So what I did is I made a spreadsheet that I think would have been similar to the person that I recently talked to on Zoom. Again, great income, $60,000 of credit card debt. Again, this spreadsheet's made up because this person didn't give me the exact financials. But I just want to show how easy, relatively easy it should be based on what little information I was given in order to help the cash flow with velocity banking. And when I see this number, whether it's at 1,000 or $2,000, especially 2,500, I'm really excited because I think this is just going to be relatively easy. Again, this is not financial advice. This is just a made up scenario that I think would have been similar to the person that I talked to yesterday. But I think what happened is that because so many of us are afraid of the credit card debt, even if we make great money and we don't apply velocity banking, it's going to be scary, right? Because once upon a time, there used to be a time where I was afraid to even put a charge on my credit card because I didn't even know. I thought like when you charge your credit card, interest immediately accrued, and I was like, I don't want to use it, so I'm just going to do things off my debit card. And then if you do have credit cards, right, we just not need to make sure that we minimize the interest. And again, I don't. This isn't the exact situation that I was given recently, but I just made this up to kind of show that if we're in a certain situation where we're making decent money, and I don't think honestly think this is that much debt, this should be relatively easy to solve, right? I'm pretty sure there would be tons of people who would like to switch positions with this person. It's like, all right, we'll switch positions, kind of like Freaky Friday. I don't know if you ever watched that movie, and I'll go from there. But again, there's a lot of great things going on for this person, and I haven't actually put that in the spreadsheet here just because this is just um, me imagining what their financials would be like, but I'm just going to show you how we can help with velocity banking. Again, this is just for informational purposes, not actual financial advice. But what is first of all, let's go ahead and review what is velocity banking. All velocity banking is a financial strategy, right? A financial strategy to help you manage your debt and cash flow using something called a line of credit, right? So it's meant to pay off quicker your lines of credit using, I'm not lines of credit, your debt using your cash flow. And it assumes two things, okay? So same income, even though more income is absolutely fantastic, and then zero savings, okay? Now here's the crazy thing. A lot of people feel really uncomfortable with the zero savings, but essentially your line of credit will be your new savings account. So if you need extra money, you pull it from your line of credit, and all your cash will go into your line of credit. So there's going to be two columns here: average American and velocity banking. So the average American uses their checking account as their main operating account. Whereas someone who does velocity banking, they use their line of credit as their main operating account, and that makes a huge difference. Okay, so we have these two requirements here. One is the budget, so we already have the budget right here, and then we're gonna have to select our line of credit as our main operating account. Okay, so now what we're gonna do is just pretend, and again, this may not be applicable to the person I'm talking about, but we're just going to pretend we have access to a home equity line of credit, and the home equity line of credit may have a available limit of, let's say, $80,000, right? So $80,000, and you might say, well, what's that? What's home equity? All it is the value of your home, or the estimated value of your home, minus any debts tied to the home, so like a mortgage and stuff like that. And let's say that that number turns out to be around $80,000. Now they don't give you the whole thing, maybe like 80 or 90% of it, but we'll just assume that we have $80,000 available for us, kind of like a credit card, based on our home equity, okay? And our home equity is our collateral, and therefore, when we give collateral to any lender, right, like they give us better rates and more limits. That's how the lending world works, okay? So, what we're going to do is we're just going to focus on the credit card debt because there is a mortgage, but I actually don't know what the balance and the interest rate is. So we're going to focus on the credit card debt today. And then what we're going to do is learn how to increase this cash flow number, right? So let's go ahead and transfer all this credit card debt to the line of credit. So this is going to be 00000. Bam. So now look how this 2400 number turned into 4500. Mind blown, right? Okay. So now how much is this in total? This is 60,000, right? 60,000. So 40, 49, 50, 60. So 60,000. 60,000. Okay. And then now what we're going to do is we're going to subtract, or I'm sorry, get the next month's balance. So this is going to be what we're going to do to get the next month's balance is the previous month's balance minus the previous month's interest minus our cash flow. Okay. So month zero, we don't have any interest because we have to wait 1 month to get the first statement, but the formula is applicable in all cases. Okay. So now we do that, and after every month, we get the interest. So we get the average of the two numbers just as an estimate because it's based on the average daily balance, multiply by that interest rate right here, and then you divide by 12. Okay, so now what we got to do is just copy and paste this formula until we see these red numbers. So if we go down here, bam, right here, this credit card debt is gone within 15 months and we're good, right? Like we're good. What do we need to fear? 15 months. Oh my goodness. My goodness. Let's just put a milestone here. So 15 months will be 6 DK. Okay? So, have you seen like those videos where it's like I paid off $10,000 of debt in like 10 months and they get like over 100,000 views? We just knocked out $60,000 of debt in about 15 months, right? It was easy. I didn't even do anything, right? Now, again, we just have to make sure that we have one account, line of credit, as our main operating account. And then all we did was a simple debt transfer, right? What's the strategy? Paycheck into the line of credit, expenses out of a line of credit, right? And here's the thing: if we go even a little bit further, and this is, I want some people say this is advanced. I don't think it's advanced, but we can still use credit cards, but the credit cards, I mean, you could still even use all of these credit cards, but the credit card limits or balances should equal 1,800 a month. Now, what is the advantage of using both a credit card and a line of credit? Well, basically, think about this. A line of credit, the main disadvantage is that there's no rewards points, and if you withdraw money, that money immediately accrues interest, right? But with the credit card, if you keep paying the balances in full every single month, if you have a rewards point system, that's fantastic. So you'll get additional rewards points, but you don't accrue interest until, if the previous month's balance is always paid off, right, in full. So that's really fantastic. So why not combine the best of both worlds? And that's what we did here. And so yeah, so that's it for today. These demonstrations, especially just credit card debt and velocity banking, is like the most easiest thing that I've had to deal with, at least for me personally. Because once you mix in like loans and low interest rate loans and high balances on those loans, that's a kind of a different ball game versus just simply credit card debt. And the thing that people freak out the most is the credit card debt because I think they freak out about the high interest rate. Like you ever notice that a lot of Americans they care so much about the interest rate and not about like how much they pay in total. So for example, if I had a $210,000 mortgage at 8%, I feel like a lot of people would freak out more about that than maybe a $320,000 um, home loan at like 3% or 2% or something like that, right? It feels like that just looking at the sentiment when people talk about mortgage rates. All right, well, that's it for today. This is Korean Atlanta Mentorship. If you're interested in joining our group, go ahead and click the Google Form link below. Other than that, have a great day, and we will speak next time.